All of the people saying supply, demand, supply, demand, supply, demand, and that's the only drum they're beating, are missing the point. There are other things that can affect the real estate market as well. One of those things is the affordability index, right? Is how much more money can people actually continue to pay for properties and or for rent. And so I think it just changes how you buy real estate right now. There have been, for the last couple of years, many people who are buying real estate on speculative cash flow. Now, back in 2008, back in like 2006, 2005, really through 2008, until the crash, people were buying on speculation for appreciation. That's a normal thing people do. Now, I'm not saying that you should do that, but that's normal, right? People buy in high appreciating markets, and they do that because they're hoping for this big, huge hit, big win, game changer, life-changing event, right? Mm-hmm. But back then, literally nobody I saw speculated on cash flow. But for the last several years, people have been. They have been buying apartment buildings, commercial properties, and single-family homes on speculation of appreciating rents.
Oh, yeah, that's true.
So they'll buy on a pro forma where the actuals do not support what is being, or what's happening, right? The price of the property. They're buying it because people are telling them that the rents are going to continue to go up. And supply and demand does dictate that that is going to happen. But at the same time, in the event we head into a recession, which it seems like is more and more possible, there are going to be fewer people who have the ability to pay higher rents, even if the supply demand problem isn't fixed, because they just literally can't do it. Mm-hmm. That's the affordability index, right? And that index right now doesn't look bad. But if we're moving into a recessionary economy, that could change really, really fast. So we go back to those real fundamentals, Heather. Are we cash flowing on properties, right? Now, I should probably say something before that, because I do still make offers on properties that are wildly under rented. There's a difference between buying a property where the rent is $500 and it's supposed to be $900 and going, okay, I mean, I get that right now this thing ain't cash flowing very well, but in 6 months when this tenant moves out, I can increase the rent, $200-$300 and still be under market. I'm not pushing the rents above where the market is. I'm just saying, hey, this is where the market is, and I'm $300 under market. That's a wildly different scenario than what I'm talking about. What I'm talking about is that people are going, okay, 2 years from now, the rent should be this, and therefore I'm going to pay a premium for this property because there's so much competition. I'm going to buy it today
in hope,
with the expectation that 2 years from now that the rent's going to continue to go up 10% a year, which is absurd in my opinion. I mean, I think that's actually absurd.
Yeah, I was going to say that same thing, because we've been doing that because we've worked with builders that don't need to keep the rents at market rent. They prefer to have like no vacancy. And so they'll keep the rents super low. And so we'll sell and say, oh yeah, these rents, because we pull current market rent comps, not a year or 2 years out or whatever, speculating.
So today current rents are $900 and the rent is $900. Yes. But in 2 years it's going to go up 10% each year, right? And then it's going to be $990, and then it's going to be, you can't do that. Mm-hmm. But if the current rents are $900 and they're getting $650 because they were too lazy to raise the rents, that's a whole different ballgame.
Yes.
Right.
Yes. 100%.
So
that's one way we're making deals work right now.
Yeah. So I mean,
education.
and I'm telling you, that's kind of where it's at, because if you go out and try to get deals, like literally a year ago, we could go get deals with the interest rates low, where you're locked in for 30 years, and you can make things work that today they don't work. They don't work, right? Now, rewind back to 2000 to 2008 again. I mean, I remember when the interest rates hit 6% and we were all like dancing. I mean, it was fantastic. That was the lowest thing ever. We have gotten so spoiled. I think we're going to be pretty excited to have gotten rates in the fives soon. That's Ron's prediction. I think we're going to be thrilled that we signed the note at fixed at 5%.
Yeah.
Yeah. So just be careful out there.